Good morning and welcome to the Australian Payments Summit 2021. I'm your host, Andy White, CEO of Australian Payments Network. I'd like to start by acknowledging the traditional owners of the various lands on which we are all meeting virtually today. I pay respect to their elders past and present and extend that respect to any Aboriginal and Torres Strait Islander people who are attending. When preparing for today, I noticed with interest last month's announcement of Macquarie Dictionary's Word of the Year. For those of you who missed it, narrowly beating the word Delta, the word of the year was stroll out, the colloquialism for a slow vaccine rollout. My reflection was that while stroll out may have been the word of the year, the most used word of the year, and indeed the last 2 years, has undoubtedly been the word unprecedented. We have, of course, lived in unprecedented times. The focus on payments has also been unprecedented, or more accurately, there has been a greater focus on payments than at any time since the 1990s. That focus reflects two underlying factors. One, as we look for economic drivers for our emergence from the pandemic, as I've said elsewhere, the digital economy is increasingly seen as the economy, and payments are the cornerstone of that digital economy. Two, the regulation that underpins our payment system dates back to the 1990s. To enable that economic driver, it therefore needs to be updated to be fit for future, given the rapidly changing nature of payments. That's what the recent Treasury review of the Australian payment system, authored by Scott Farrell, whose key recommendations were yesterday endorsed by government, seeks to do. In undertaking to contemporise the regulatory environment, it ties into several other major reviews conducted over the course of this year. The RBA's review of retail payments regulation, the Senate Committee on Australia as a Technology and Financial Centre, the Parliamentary Joint Committee inquiry into mobile payments and digital wallets, and ASIC's review of the e-payments code. The scale of these reviews demonstrates the focus payments is receiving. The reviews also provide a useful context for our agenda today. We'll hear from the RBA Governor, Philip Lowe, who will provide his key insights on the Australian payment system. We'll also hear from the Chair of the Senate Committee on Australia as a Technology and Financial Centre, Senator Andrew Bragg, who will reflect on the committee's forward-looking recommendations in the areas of banking and cryptocurrency. And we'll have a panel session with Deloitte, which will look at mobile payments and digital wallets and compare the Australian and global experiences in those areas. Before I hand over to our speakers, it would be remiss of me not to recognise the way that we at AusPayNet, with the support of our members, have, alongside the changes in payments more generally, evolved over the last year. That evolution has definitely been a rollout, not a stroll out. We now have a governance structure that enables all of our 144 members to be directly represented on the AusPayNet board, incorporates a stakeholder advisory council to ensure that our board decisions are informed by the views of wider industry stakeholders, including end users, and adds a payment service provider membership category that gives PSPs who play an increasing and critical role in payments an opportunity to join us as members and ensures that AusPayNet is representative of the entire payments value chain. Our next steps on governance include commissioning an independent review against best practices for standards bodies ahead of the establishment of the process for the authorisation of industry standard setting bodies envisaged in the Treasury review and endorsed by government yesterday. Alongside that governance work, we've been focused on leading the modernisation of Australian payments, managing the industry high-value migration to ISO 20022, reviewing the technology underpinning the coin network, supporting the customer-led decline in cheques, and beginning the conversation on the eventual closure of the direct entry system. We've also provided leadership on strategically important areas of payments that require new or renewed standards to be set, be that fraud, scams, device security, QR codes, or cross-border payments. And speaking of leadership, we were delighted yesterday to appoint our new chair, John Brogden. John brings experience as a chair, knowledge of financial services, industry bodies, government and corporate governance, and will be a significant addition to our board and our company. That's quite enough from me, but before I hand over to our first speaker, a few quick logistics. Today's session will be recorded, media are present, and most importantly on Q&A, please raise any questions for our speakers in the Slido app. You can do so anonymously, but you also have the option of recording your name. I'll monitor Slido and will share questions with the speakers and the Deloitte panel. In that regard, I should note that the Governor will take questions on the Australian payment system. He is not here to talk about monetary policy. And now it's my great pleasure to welcome our first speaker with his annual address to the Australian Payments Summit, the Governor of the Reserve Bank of Australia, Philip Lowe. Governor.
Thank you very much, Andy, and good morning, everyone. This is the 5th time I've had the privilege of addressing AusPayNet's annual summit. Each time I've attended the summit, the world of payments has seemed more exciting and more dynamic than it was just a year earlier. No longer do people talk about payments as being the plumbing of the financial system. Instead, they talk about how what is happening in the world of payments is reshaping our financial system and how it's going to continue to reshape it into the future. This morning, I would like to talk about that future. Because we all know making specific predictions is difficult. None of us has a crystal ball. Even so, the general direction of change is reasonably clear, even if we don't know the final destination. This morning, I would like to begin by talking about that general direction of change. I'll then also discuss a number of specific priorities of the Payment System Board for the near term, and then I want to look a little further out into the future. And I'll finish with some comments on the importance of our regulatory arrangements being flexible enough to deal with this rapidly changing world. So I'd like to start by highlighting 5 trends that are evident in the payment system and I expect will continue. These trends are the declining use of banknotes and the increasing use of electronic forms of payments. Second, the greater use of digital wallets. Third, the growing involvement of the big techs in payments. Fourth, the increasing specialisation within the payments value chain and the emergence of new business models. And fifth, the growing community and political interest in the security, reliability and cost of payments. And as you know, these trends mean that anyone involved in this industry is very busy at the moment. I think you're going to stay busy. This shift away from banknotes was in place before the pandemic, but it has accelerated over the past 2 years and I think it's likely to continue. The RBA will conduct another of our regular surveys on consumer payment methods next year. But as you can see in my first chart, the data on cash withdrawals from ATMs tell the story pretty clearly. The value of ATM withdrawals over the past 6 months was 30% lower than the comparable period just 3 years ago. While banknotes are still used for many transactions, I think the trend here is pretty clear, so I think it's likely to continue. In contrast, there has been a trend increase in the number of electronic payments, and this trend too is likely to continue. There's been particularly strong growth in debit card transactions as people move away from credit and towards debit. And there has also been strong growth in account-to-account transactions. I think as you can see in this chart, these account-to-account transactions are increasingly being made through the new payments platform rather than through the direct entry system. It is therefore appropriate that the industry is considering when the direct entry system might be wound down and how we move more fully to the more modern payments infrastructure of the NPP. An increasing share of electronic payments is also being made through the digital wallets offered by the large technology companies including Apple Pay, Samsung Pay and Google Pay. Many people are now choosing to make payments through their digital wallet rather than using banknotes or a card stored in their physical wallet. I expect that this change has only just started and it too has a long way to run. A related possibility is that digital wallets provide more than just access to existing bank and credit card accounts. In particular, they could contain tokens that could be used to make payments, and as I'll discuss in a few moments, these tokens could be issued by the central bank, or by a private bank, or by another entity. The final destination here isn't clear, but it is highly likely that digital wallets, perhaps with tokens, will become more important in our payment system. Another trend that's likely to continue is the increasing interest of big tech firms in payments. The platforms used by these firms give them large network effects which can be used to quickly build a payments business. They are also able to combine payments data with other data from their platform, often with cutting-edge technology. Some of these companies already provide digital wallets, and some are also exploring how these digital wallets could be used for non-traditional payment methods. So it's highly likely that we'll continue to see new business models emerge here as well. At the same time, another trend is for smaller players to enter the market, focusing on specific elements of the payments value chain. This is bringing increased competition and making new business models possible. Over recent years, the fintechs in Australia have driven innovation in areas such as online payments, point of sale acceptance technology, cross-border retail payments, and buy now, pay later services. So there's a lot happening here. Some of these companies already play a material role in facilitating payments, and I expect that further innovation in this space will see this role continue. This rapid change in the world of payments has brought with it increased community and political interest in payments. I expect that this interest will intensify rather than diminish, given the importance of the issues to the community. These issues include how to ensure that banknotes remain widely available for those who want to use them. And as part of this, the RBA is currently undertaking a public consultation on banknote distribution arrangements. A second issue is how to keep downward pressure on the cost of electronic payments, particularly for small merchants. As more payments are made electronically, the focus on the cost of these payments will surely increase. A third issue that's attracting a lot of attention is to how to address the competition issues that arise from the increased involvement of big techs in the payment system. One important issue here is the access arrangements for the devices and for the digital wallets that they offer. A fourth issue that's attracting a lot of interest is how to ensure that the electronic payment system remains secure and that it's available when people want to use it. Our economy is increasingly dependent upon the digital infrastructure of the payment system, so we really need to make sure that it's resilient to cyber threats and to other operational risks. I think it is evident from this quick tour, the world of payments is very dynamic at the moment, and there is a lot of community interest in it, so there's a lot to talk about. I would now like to move from the general direction of change to 5 specific areas where the Payment System Board would like to see further progress. In each of these areas, some progress has been made, but the Board's view is that more is needed. The first of these 5 areas is the new Pay To service on the NPP, which is expected to serve as a replacement for the current system of direct debits. The existing system of direct debits has worked well in some respects, but a more modern system is now needed. The Pay To service will allow households and businesses to authorise other entities to initiate payments out of their accounts, opening up a range of possibilities for innovation. We expect the industry to keep its commitment to a successful launch of the new system in July next year. A second area where we'd like to see more progress is the payment with a document overlay service on the NPP. This service, and particularly the ability to include a link to a document with a payment, will promote innovation and it will reduce costs. The service will aid reconciliation for recipients. It will also allow payers to devote fewer resources to managing customer inquiries. Unfortunately, this is one area where progress by the industry has been slow. Despite this, the RBA, as the Australian Government's banker, is working with the government and with the Commonwealth Bank to introduce a payment with a document service, and we encourage others to join us in this effort. Further progress is also needed to deliver the benefits of open banking. Open banking strengthens competition and promotes innovation by giving customers the right to control and share their banking data with accredited third parties. It can help customers have a top-down view of their financial position, and it can help people manage their upcoming payments. It can also help to streamline the credit assessment process and help consumers get a better deal. The banks are making progress with implementation, but some have not met the target dates that were earlier agreed to. It's important that progress does not slip further here, especially as the number of accredited data recipients continues to increase. The fourth area where it would be good to see further progress is the development of widely accepted digital identity services. When I spoke at this conference 3 years ago, Andy, I spoke about how the digital economy needs a strong form of digital identity. I did so at the time because I was concerned that Australia was slipping behind best global practice in this area. Since then, 2 frameworks for interoperable digital identity services have been developed, but there has not been a large-scale rollout of a digital identity service that can be used for a wide range of online interactions. So further progress on this front would be welcome too. The final focus area that I wanted to mention was cross-border payments. Unfortunately, it still often costs around 5% or sometimes even more for a payment to be sent internationally from an Australian bank account. And it usually takes more than 1 day, sometimes much more, to reach the recipient. We know from our discussions with the central banks of the South Pacific that too often it's the disadvantaged people who pay the highest prices and wait the longest. This is an area where the financial sector is not serving the community as well as it could or as well as it should. This is very much the sentiment of the G20's roadmap to make cross-border payments cheaper, faster, more transparent and more accessible. The RBA is contributing to this effort through working with the Reserve Bank of New Zealand and the South Pacific Central Banks on a possible regional Know Your Customer Identity utility. We are looking for the Australian payments industry to support these and other initiatives to improve the existing infrastructure for cross-border payments. A large effort is required here, but it is one that is needed to provide better services to customers, and it's also needed to meet our international commitments that Australia has made to the G20. So these are the 5 specific areas that I wanted to highlight: the pay to service, payment with a document, open banking, digital identity, and cross-border payments. As you would appreciate, all of these areas have a heavy technology focus, and I recognise the challenges of coordinating and investing in many technology projects at the same time. So we do appreciate it's a full agenda, but it's an agenda we need to prosecute successfully. I would now like to move beyond these specific initiatives and discuss another issue on our agenda. I think this one, there's more uncertainty around the final destination. Earlier I talked about how digital wallets are replacing physical wallets and that this trend is likely to continue. It's also likely that these digital wallets will contain more than just a digital representation of the cards that are currently in our physical wallet. In particular, I expect that they are likely to provide access to new tokens or account-based forms of digital money. This would allow day-to-day payments to be made by moving tokens around rather than by moving banknotes around or by moving value between bank accounts. How far we go in this direction and what form these tokens might take are yet to be determined, but I'd like to talk about some of the possibilities. One possibility is that the tokens are issued by and backed by the Reserve Bank, just as we issue and back Australian dollar banknotes. This would be a form of retail central bank digital currency, known in the space as a CBDC, or the language I prefer, an EAUD. I've said previously that the RBA is open to this possibility. To date, though, we have not seen a strong public policy case to move in this direction, especially given Australia's efficient, fast and convenient electronic payment system. It's possible, however, that the public policy case here could emerge quite quickly as new technology evolves and as customer preferences change. It's also possible that these tokens could offer a lower cost payment solution to some of the existing solutions from the existing technologies. And as I'll discuss in a moment, there are advantages in digital payment tokens being backed by the central bank. All this means that we have been continuing to closely examine the case for a retail central bank digital currency, and we're working very closely with other central banks on this issue. We're looking through the relevant technical issues as well as the broader public policy implications of any shift away from a payment system based on the movement of value between bank accounts to one that's more based on the movement of tokens between digital wallets. As part of this effort, we're planning to work with Australia's new Digital Finance Cooperative Research Centre, and we'll also be working very closely with the Australian Treasury, and we welcome the government's announcement yesterday. Another possibility is that these tokens are issued and backed by an entity other than the central bank, although they're still denominated in Australian dollars. These would be a form of stablecoins. If this is how the system develops, it will be important that these tokens are backed by high-quality assets and that they meet very high standards for safety and for security. One reason I say that is that an important lesson from history is that privately issued and privately backed money all too often ends in financial stability and losses for consumers. And this is an important reason why national currencies are today ultimately backed by the state. So if privately issued stablecoins do ultimately become common, it will be crucial that they meet very high standards. And if there are going to be multiple stablecoins, there are clear advantages in them being interoperable with one another. The RBA is working with domestic regulators and our counterparts around the world on the important public policy issues here. A third type of potential digital token is a cryptocurrency that's not linked to the Australian dollar, or it's not backed by a particular entity or by specific assets. I remain sceptical that we will head in this direction for general purpose payments. It's likely that the asset used for the settlement of most transactions in the Australian economy will remain some form of secure fiat currency with a stable value rather than a cryptocurrency with a volatile price. That's not to say there's no role for crypto assets. They can help support innovation, especially where they're linked to smart contracts and can be used in decentralised finance applications. There's clearly value in experimentation to find out what works and what doesn't. But as these experiments are conducted, it's also worth considering whether the benefits of smart contracts and decentralised finance can be gained with some form of stable coin or with a central bank digital currency rather than a new unit of account with a volatile price. While on the topic of crypto assets, I'd like to repeat a point made recently by my colleague Tony Richards, and that is that anyone purchasing these assets should take care. There is still a lot of uncertainty about how the long-term usefulness of these assets will evolve. Before investing, it's best to fully understand the underlying value proposition. Relevant considerations here include the usefulness to end users of the underlying payments technology, the security of the funds invested, the volatility in the price of the asset, the stability of the intermediaries used, and the ultimate backing of the assets, not to mention the significant energy consumption that's sometimes required to make a single transaction with these crypto assets. So there is a lot to think about before investing, and the message is make sure you understand the underlying value proposition. I'd now like to move to the wholesale side of the payment system, and the RBA has been examining the case for a wholesale central bank digital currency, which can be thought of a form of tokenised form of settlement balances, exchange settlement balances at the RBA. These could be used to settle transactions on tokenised assets on various blockchains. Yesterday, we released a report on Project Atom, which is a wholesale central bank digital currency research project we conducted with 4 external parties. The project explored how access could be extended to a wide range of wholesale market participants and explored the suitability of distributed ledger technology for this kind of system. Overall, the project has confirmed that this is an area that's worthy of further research. The RBA is also in the midst of another significant wholesale CBDC project called Project Dunbar, which has been conducted with the BIS Innovation Lab and with 3 other central banks. That project is exploring the possibility of using a central bank digital currency in various cross-border payment applications. I would now like to move to the regulatory challenges posed by this fast-moving world of payments. With so much change taking place, regulators and payments legislation can't stand still. As Andy said, the digital economy is very important to Australia's future, and we need to make sure that our regulatory system encourages innovation and that it also ensures that the system is safe, secure and stable. Given this, the RBA welcomes the government's response yesterday to the 3 recent reports. These reports are the Treasury Review of the Australian Payment System led by Scott Farrell, the report of the Select Committee on Australia as a Technology and Financial Centre, and the Parliamentary Joint Committee's report on mobile payments and digital wallet financial services. 3 substantial reviews and reports, and the Reserve Bank welcomes the government's comprehensive response yesterday. There is a lot of work to be done here by Treasury, by the Reserve Bank, and by other members of the Council of Financial Regulators. I can't do justice to all the issues here, but I want to briefly touch on some that relate directly to the Reserve Bank's responsibilities. The government's support for developing a strategic plan for the payments ecosystem is a very positive step. Because payment systems are networks, there is a need for coordination. Like we all know, this can be challenging amongst competitors. The Payment System Board has seen part of its role as helping overcome these coordination challenges in the payment system. And I think yesterday's announcement by the Treasurer will also help with this coordination. The RBA also supports the decision to introduce a new tiered licensing regime for payment service providers. This should help encourage innovation and competition while promoting safe and resilient payment systems. As part of this, we are keen to ensure the implementation of a new licensing framework for stored value facilities based on the model proposed by the Council of Financial Regulators a few years ago. We're also pleased to see the government's support for reviewing the Payment System Regulation Act to make sure that it's fit for purpose. The payments ecosystem is becoming more complex, and there are many more entities in the payments chain than there used to be. If the Reserve Bank is to meet its broad mandate to promote competition, efficiency and stability in our payment system, then we do need to modernise the definitions that were included in the legislation more than 2 decades ago. Finally, I want to note that the Council of Financial Regulators is continuing to review the regulatory treatment of different types of crypto assets, including stable coins. This is in line with the Select Committee's view that we need a regulatory regime that better accommodates the new digital assets in the Australian economy. As I said earlier, if stable coins and other types of privately issued digital payment tokens are to become widely used for everyday payments, they need to be subject to a clear and effective regulatory regime that encourages both innovation and mitigates the risks against the risk to users and to the financial system more broadly. So to conclude, Andy, our payment system is changing rapidly. We all know that. Both the regulators and the government understand this, and we're seeking to put in place arrangements that encourage innovation and competition and make sure that the system is safe, secure and stable. We have a lot of work to do here, but we are moving in the right direction. AusPayNet is a valuable partner in this work, and it plays an important role in the governance of the Australian payment system. I look forward to continuing the cooperation between AusPayNet and the Reserve Bank as we grapple with the challenges ahead and as together we seize the opportunities offered by the new technologies. Thank you very much for listening and for inviting me for the 5th time, and I'm happy to answer some questions.
Thank you, Governor. It's a delight to actually sit down face to face with you. I know you've suffered more than most with Zoom. I know you had your stiff neck issue a couple of months ago, so it's nice to be in person.
Thank you.
You've prompted a range of questions. We might start near the end. I think your opening remarks that there's a lot going on was right, and that that was certainly emphasised by the range of topics that you spoke about and the range of questions that we're seeing through the app. If we start near the end, though, piece around the reviews and Treasury's announcement yesterday, there's a question in the feed about, is this a shift in the balance of power on payments from the RBA to the Treasury? I think my take on that would be that with the review of the PSR Act, actually, it's helpful in allowing the RBA to look at areas where previously it hasn't been able to, but I'd be interested in your view.
Yeah, I don't think of this in terms of a shift in power between the bank and the government. The couple of things that I really valued out of yesterday's announcement was, first of all, that the government is committed to a greater leadership role in the payment sector. And I think that leadership role will help solve some of the coordination problems we've been grappling with. So that's one very positive initiative. The second is the commitment by the government to look at a whole range of legislation. It's not just the technical definition of a payment system in the Payment System Regulation Act, but the regulatory regime for crypto assets, the licensing arrangements, the custody arrangements, disclosure arrangements. So there's a lot to welcome in yesterday's announcement, and the Reserve Bank will be working with the government and the Treasury. So I'm not kind of looking at shifts in balance of power. I think what we've seen yesterday is a decisive step by the government to move Australia forward here, which is going to benefit us all.
I think that's my take as well. I think the leadership is really welcome, and the coordination point is a point really well made. On that, you mentioned the strategic plan, and that being one of the key pieces that government was keen to get to. I wondered, hearing you talk about those near-term priorities, and particularly talk about how all of them involve technology, whether that strategic plan is a way of helping with that and cutting through some of that and really emphasising the order for those priorities to be delivered, and particularly with an end user focus of what actually are the benefits to end users and maximising those.
Yep, well, there may well be an advantage in getting a broad agreement within the industry of how these projects sequence. As I know from the experience of the Reserve Bank, because we're a bank as well and we're having to invest in all these things, and it's the same people working on many of these projects. So the sequencing is important. I think it's also important, though, that when the industry commit to doing things by a certain time, that they meet those commitments. And my understanding is that some of the political reaction we're seeing here is a reaction to industry not meeting the deadlines they've agreed to. And to the extent that the political process can accelerate that whole process of meeting the deadlines, I think that would be positive as well.
Thank you. Inevitably, your comments on digital currency have sparked a range of questions, and it's interesting that you mentioned the RBA's role as a bank in that. Questions that I know you've thought long and hard about in terms of the relative role of the RBA versus commercial banks, particularly if an EAUD were to come into existence, and whether that creates any competition issues between the Reserve Bank and commercial banks, or any sort of flight risk from commercial banks to the central bank.
Yep, they're the issues that we're working through internationally, and when I spoke about this issue, I think maybe 3 years ago at AusPayNet about an EAUD, one of the concerns that was prominent at the time was that in a period of stress, where there was concerns about the health of the bank system, that depositors would take money out of their bank accounts and want to invest in the central bank digital token, and that could destabilise the banking system. At the moment, people can run to banknotes, but it would be a different matter to be able to run to a central bank-backed liability, so that's an important issue to be worked through. In some of the discussions that are taking place internationally, people are working through the possibility of putting limits on holdings of the digital tokens so they can be used for payments but not as an ultimately store of value. A related issue that's being discussed internationally is whether these tokens should carry interest. If they did carry interest, then they would be a direct competitor to bank accounts. This is not something that I think is in the public interest, but who knows what could happen over time, but I just don't see as going down a path where these tokens attract interest and are a direct competitor to bank accounts, because that could change the whole structure of the financial system.
Mm. Yeah,
the liability structure of the bank system would change, and then the Reserve Bank would end up with we've got a large balance sheet today because of monetary policy operations, but we could have a very large balance sheet because people hold these tokens. So there are a lot of issues here. This is why it's worth taking time, because people from a technology focus look very much at the technology aspects of this, and they're very exciting, and it's innovative and it's great to explore those. But there are deep issues about how it could affect both the stability and the operation of our payment system that need to be worked through. And at the meetings I'm often doing late at night, these international conference calls, we're talking about those.
And that's actually one of a couple of questions around the detail of that. If you're able to talk to that coordination internationally, particularly with BIS and other central banks, and this is asking you to have a bit of a crystal ball, which, as you rightly pointed out, no one has. Yep. But as a possible timeline for introduction of CBDC.
I don't have a good insight into when we'll see actually one out in the marketplace. At the moment, it's really around proof of concepts and small trials to see how the technology works. So we're all doing these experiments at the moment. We're working with the Monetary Authority of Singapore, Bank Negara in Malaysia, and the South African Reserve Bank on the feasibility of a platform with multiple central bank digital currencies, and that would allow cross-border payments to be made without correspondent banks. If we could do that, it'd be fantastic. But as we work through the issues, we've got to solve not just the technology problems, but the governance issues, the legal issues, issues about the finality of settlements. So I still think it's going to be quite a few years before we see anything more than small-scale proof of concepts.
Thank you. I might switch gears slightly and just talk about cash. That also prompted some other questions. You rightly referred to the consultation that you're doing around banknote distribution. As I think of it, banknote distribution underpins cash in society, and then there are questions around both access to cash, which again the RBA does some research on in terms of the average Australian's ability to access cash, and the acceptance of cash by merchants. But we are, of course, at an interesting point with cash where, as you pointed to in your remarks, cash transactions have declined, but we know banknotes in circulation are at record highs. So how do you sort of think about that and the role of cash in society and what needs to be monitored over time in those access and acceptance areas? Well,
we currently monitor very closely the distance that people have to travel to a cash access point, and as ATMs have closed and bank branches have closed, the average distance has increased a little bit, but by and large Australians still have very good access to cash. The broader issue is, as cash use declines, what is the community's view about merchants being required in some way to accept cash? That's not an issue that the Reserve Bank would directly tackle itself, but it's really one that could be covered as part of this national roadmap. And it's as much a kind of political and community question as one for the Reserve Bank. What is the size expectation to be able to pay in cash? Clearly, in many places, we can't play with cash, and we accept that perfectly well, but in other cases, people still want to pay in cash, in banknotes, and I really see this as a political issue that we have to address rather than something for the central bank to determine how it's going to work out.
And understanding the motivation of the reason behind the banknotes in circulation, I guess, is part of that, the analysis there.
Well, I think I understand why most of the banknotes are out there, and they're held as a store of value. At the moment, there are 16 $100 notes out there for every single person in Australia. 16. I don't think most of them are in anyone's physical wallet. They're under the bed, in the cupboard, in the safe at home, if you've got a safe at home. So The vast bulk of Australia's banknotes are being held as a store of value. The low interest rate environment is part of that, but still people want to hold banknotes as a store of value, and
I suppose a fallback mechanism as well, to your
Yep.
point about resilience.
Yep.
Final quick question, just on your thoughts on the cost of payments to merchants. There were a couple of questions around surcharging and also BNPL in the feed, and I know both of those points were addressed through the review that the RBA just did, but just your thoughts on that aspect.
Yeah, that's a very good question. It's an issue the Payment System Board spends a lot of time talking about, because as payments become electronic, there's rightly a huge focus on getting the cost of those electronic payments down. My view, there's still the society is still paying too much for its electronic payments, and over time that's going to need to come down. The initiatives that we've announced on least cost routing are part of that. I think the ability of merchants to surcharge is important. Most merchants don't like surcharging, but they do like the ability to just discuss with the payment provider that if you don't lower the cost, then I will contemplate at that. The reduction in interchange, in the cap on debit card interchange from 15 cents to 10 cents as part of the recent review is going to help there as well. And I think over time, open banking and the consumer data right will help. So put all that together and the payment costs are coming down, the innovation we're seeing in the payment system will come down. As we said in the conclusions to the review just recently, we think over time it would be good if the buy now, pay later operators remove their no surcharge rules. It's important there's a level playing field. The credit card and debit card operators can't have such rules, and I think it would be good over time if the buy now, pay later operators didn't have those rules as well. They could do that voluntarily, or regulatory arrangements might evolve over time to allow that to be done. All those things together I think are going to put downward pressure on payment costs, which is important.
Excellent, thank you. That's a perfect way to finish, Governor. And thank you for your time, and thank you for your address. As you say, for the 5th consecutive year, it's very valuable to us and to our members.